Okay, morning everyone. Looking at the US stock markets, the Dow has again recovered from the 24,000 psychological level. Since then, it had rallied towards the recent peak of around the 25,700 points. After hitting an intraday high of 25,700 points level, we did see the pullback happens on the Dow Jones Index as the Dow pullback just towards the EMA 60 level. It formed a hammer candle, and we did see the reversal pattern for the recovery on the Dow Jones was noted on the next day itself as the Dow gap up and subsequently closed above the EMA 20 level. So this could be the short-term breakout, pullback, and the continuation pattern for the Dow. Firstly, to retest the 25,700 points. Should there be a breakout above that, further upside will be seen towards the 26,000 psychological level. Gains on the US stock markets overnight was underpinned by the resumption of trade talks between China and also US. On the broader market, the S&P 500 has again recovered from the 2700 psychological level. Since then, it has hit the recent peak of around the 2863. Subsequently, we did see the pullback on the S&P 500 just towards the EMA 20 level, forming a hammer candle on top of the 2800 psychological level. So this could be the breakout, pullback, and the continuation pattern for the S&P 500, firstly to retest the 2863, subsequently towards the previous all-time high of 2872 level on the S&P 500. Okay, so updates on the crude oil prices. The crude oil prices has earlier retreated from the recent peak of around the 75 US per barrel mark. Since then, it has pulled back and subsequently violates below the 66 US per barrel level, or the EMA 120 level as well. So for now, we expect some of the mild bargain hunting activities on the crude oil prices back towards the 67. Until we can see a breakout above the 67, only we can confirm that the crude oil prices could be heading back towards the 70. In the meantime, the immediate support will be located towards the 63 US per barrel mark. All in all, crude oil prices has turned slightly negative at current juncture as it has been forming the lower high and also the lower low formation over the near-term period. But the reversal pattern can only be confirmed when the crude prices has fallen below the 63. Should the 63 level could not hold, then this could be the head and shoulders formation on the crude prices. This was the left shoulder, the head, and the right shoulder. Okay, some updates on the local front. The FMKLCI has again rallied towards the recent peak of around the 1800 psychological level. However, the 1800 level could not hold as we did see the shooting star candle was being formed, and subsequently the FMKLCI has retreated back below the 1800 psychological level. Given the positive developments in between US and also China, we could expect the recovery on the Wall Street to spill over towards emerging markets like Malaysia. So on the FMKLCI, this could be the potential breakout, the pullback, and a potential continuation pattern for the FMKLCI. Firstly, to retest back towards the 1800. Should there be a breakout above that, only we can confirm for further recovery towards the 1830 level. In the meantime, the 1760 will serve as the immediate support level for now. On the lower liners wise, the S&P 500 has again formed some of the recovery on top of the 13,650 points level. Since then, we did see the high and also the high low formation was being established on the FM small cap index over the near term period. So for now, we need to monitor for the breakout above the 15,200 points level. Should there be a breach above that, then we could see further upside on the FM small cap index for further recovery back towards the 16,000 psychological level. In the meantime, the 14,560 will serve as the immediate defense for now. On stocks wise, some of the stocks that we can watch out for will be firstly is CGAS. CGAS is still on downtrend formation, so any recovery from now will be just taken as a technical rebound. It has found some of the support along the 78 cents level recently, and it has been trading on a sideways manner over the past couple of months. However, on yesterday itself, we did see some of the accumulation was taking place on CGAS as price retested the EMA 120 levels. So for now, we need to monitor for the breakout above the 84 cents level. Should there be a breakout above the 84 cents level, then we could see further upside for CGAS firstly towards the 92 cents or even towards the 99 cents level. The stop loss point will be located below the 78 cents level on CGAS. Everything appears to be quite positive right now, as you can see that the MACD indicator has been forming the higher low formation throughout this period of time. On our pen page, price is also on a technical rebound phase after the pullback towards the recent low of around the 20.5 cents level. We did see pen page has experienced the consolidation breakout above the 22.5 cents level yesterday. So following the breakout above the 22.5 cents, we could expect further recovery on the pen page towards the 24 cents. That will be the immediate support, immediate resistance level for now. Should there be a breakout above the 24 cents, then only we can see further upside towards the 27.5 cents level. Price could be performing the breakout towards the 24 cents, a pullback, and then the continuation pattern to be established towards the 27.5 cents. In the meantime, the immediate support level will be located towards the 21.5 cents level on pen page. Everything appears to be quite positive on the indicators right now. Following the breakout above the 22.5 cents, we did see the MACD indicator has already issued a buy signal, whereas the RSI has risen above the 50 as well. On Sunday, our price has been trading on a sideways manner after hitting the intraday low of around the 18.5 cents level. Since then, price has been traded on a sideways manner towards the 23 cents. We did see a breakout above the 23 cents as price forms of the high volumes. However, we did price subsequently formed the inverted hammer candle, and the lack of follow through by interest on the next day itself has seen the Sunday gap down back towards this consolidation level. So for now, we need to monitor for the breakup of the 23 cents. Should there be a breakup of the 23 cents, then we can trade Sunday towards the 26 cents or even towards the 28 cents level. The stop loss point will be located towards the 19.5 cents level on Sunday. On HSL, price has again been recovering from the recent low of around the 1.30 level. Subsequently, price has made a good breakout above the 1.44 as price gap up yesterday after the company has delivered a strong set of corporate earnings. So following the breakout of the 1.44, we could expect price to see further upside to cover its previous gap down formation towards the 1.52 or even towards the 1.59 level. The stop loss point will be located towards the recent low, which is around the 1.35 on HSL. On indicators wise, everything appears to be quite positive right now, as you can see that the MACD indicator has been forming the higher low and also the higher high formation. The MACD line has really risen above the 50 level as well, whereas the RSI has been maintaining its stance above the 50 level over the past couple of days. SYF, price has been on a bottoming out from phase after hitting the double bottom formation on top of the 26.5 cents level. Since then, we did see the bullish divergence was being formed throughout this period of time as price has been trading lower, the bottoming indicator has been trading higher. Price made a good recovery towards the EMA 120, but there's also the lack of follow-through by interest above the EMA 120 has seen the SYF pull back and trade on a sideways manner. But on yesterday itself, we did see a gap up formation as price breached above the 33.5 cents level with some of the massive volumes being traded. Following the breakout of the 33.5 cents level, we could expect some of the mild pullback activities to occur over the next couple of days before the next upward resume for SYF towards the first target price at the 38 cents, subsequently towards the 42 cents level. The stop loss point will be located towards the 29.5 cents level if we manage to accumulate around the 33.5 cents level on Sunzen. Sorry, on SYF. Last company for today will be Econpal. Econpal has seen price tanking towards the recent low of around the 55 cents level in tandem with the weakness across the general construction industry. Subsequently, price made a good recovery pattern on top of the 76.5 or 77 cents level. Following the breakout above the 77 cents level, we did see price has been traded on a sideways manner over the past 1 month trading period. And also the company has announced the has backed a contract worth about 30.1 million yesterday. So for now, we can monitor for the next recovery above the 97.5 cents. Should price breach above that, then we could see further upside for Ecompal towards the 1 ringgit and 7 cents, or even towards the 1 ringgit and 18 cents level. The stop loss point will be located towards the 90 cents level on Ecompal. Should there be a breakout above the 97.5 cents? Should price breach above the 97.5 cents, we could expect the MACD indicator to shoot a buy signal, whereas the RSI has really risen above the 50 level on yesterday itself. If you have any questions, you can put in the chat box and I'll reply you shortly. Question here on MRCB. MRCB earlier we did mention for the breakout pullback and the continuation pattern for price to retest the first target price at the 85 cents towards the 89.5 cents level. It has hit the 85 cents level and subsequently price traded a sideways manner. So for MRCB, over the short term wise, we need to monitor to see how price holds above the 81 cents. If price can recover from the 81 cents and rebound from that point onwards, then we could see further upside for MRCB towards the 89.5 cents or even towards the 99 cents level. A stop loss point will be located towards the 81 cents level. But if you want to take further risk, then your final defense will be located towards the 75 cents. So for now, we expect some of the sideways movement until we can see a breakout above the 89.5 cents. Only we can see further upside. But all in all, our price is forming the higher high and also the higher low formation over a short-term period, so implying that the recovery is still intact at current juncture. On a WCT wise, price is still on a sideways manner between the 91.5 cents, 92, 91 or 92.5 cents towards the 1 ringgit and 1 cents level. So until we can see a breakout above that, only we can confirm for the recovery towards the 1 ringgit and 13 or even towards the 120. Given that there's not much volumes being traded, we expect price to just hover on a sideways manner until we can see some of the higher volumes, higher than about 13 million volumes being traded. Then only we can confirm for the recovery on the WCT. On EcoWest, price is also still on a traded sideways manner between the 73 cents towards the 78 cents level. Until we can see price breach above the 78 cents, only we can confirm for the next recovery on WCT. On EcoWest towards the 85.5 cents level or even towards the 92.5 cents level. In the meantime, the 73 cents will serve as the immediate support level, followed by the 69 cents. Similar with earlier on the WCT, price has still we did see not much volumes being traded on over the past 1 month trading period. So price will likely to just linger on a sideways manner for now until we can see a boost in volume. Only we can confirm and on the bullish candle above the 78 cents. Only we can confirm for the next rally on EcoWest. On our QAS, price is on the uptrend implementation formation, similar with most of the technology or ACE market companies. We did see QAS has experienced the breakout above the 20.5 cents level. Subsequently, we did see the follow-through buy interest was noted on QAS. It has also managed to hit the recent peak of around the 24.5 cents intra all-time high level. So for now, we need to monitor for the breakout above the 24.5 cents. Should price breach above that, we could see further upside for QS towards the 26 or even towards the 28. So every 2 cents will serve as the immediate support level, immediate resistance level for now. While you can take the EMA 9, which is currently located at the 22.5 cents as your trading stop loss point. If you want to take further risk, then the final defense will be located towards the 20.5 cents. Edaran has again seen some of the rally towards the recent high of around the 82.5 cents level. Subsequently, price has been traded on has pulled back or traded on a sideways manner. So for now, we could take this as a potential pennant formation. So until we can see the breakout above the 77.5 cents, only we can confirm for a recovery for price to head back towards the 83.5 cents or even towards the 93.5 cents level. Your immediate stop loss point will be located towards the 69 cents on at the run. Given that price has already quite overbought right now, we might see the consolidation phase to linger over the near term period, likely to be about 1 to 2 weeks to see the next to see further action on at the run, unless the company has announced some positive news over the near term. On Ewin, price has again hit the recent peak of around the 89 cents level and subsequently price traded sideways manner. So for Ewin, what we need to do now is we're going to monitor for this potential triangle formation breakout. Should price breach above and also close above the 82.5 cents, only we can confirm price could be heading towards the 88.5 cents or even towards the 95 cents level. The stop loss point will be located towards the 77 cents level on EWIN. Just bear in mind that EWIN, there's a potential bearish divergence signal at current juncture. As you can see that the price has been trading higher, making the high formation, but the MACD indicator has been forming the higher low formation throughout this period of time. So just have to be careful. If price were to violate below the 77 cents, then you have to best to cut loss or take profit immediately. Upcom is still trading on a sideways manner for now. Price is still consolidating between the 191 cents towards the 1 ringgit and 3 cents, 1 ringgit and 4 cents level. So for now on our Upcom, we need to monitor for the breakout above the 1 ringgit and 4 cents for us. Only we can see further upside towards the 117. Your stop loss point will be located below the 91 cents level on our Upcom. So for now, our outcome could be just slightly to be just traded on a sideways manner, given that the lack of volumes being traded over the past couple of days. Until we can see some of the high volume, something similar like this, only we can confirm for the next rally on Upcom. On Penta, price is on a very strong uptrend intact on rotation formations, similar with most of the technology companies. Penta has again rallied above the 259 cents level, and subsequently price continues to maintain its stance above the daily EMA 9 level. So for our Penta master, you can continue to hold on to your shares as long as price continues to maintain its stance above the EMA 9, which is currently located at the 3.10 for you to trade towards the 3.40 or even towards the 3.60 level. So the next resistance will be located towards the 340, 360, and subsequently or every 20 cents, the 380 and also the 4 ringgit will serve as the following target price. Well, the daily EMA9, which is currently located at the 3 ringgit and 10 cents, will serve as the immediate trading profit or stop loss for now. Your final defense will be located towards the 2 ringgit and 95 cents level on Penta. Given that there's no bearish divergence signal at current juncture, we could expect further upside on Penta towards the 340 or even towards the 360. If there's no further question for today, then we'll end the morning briefing. Thank you.